Hi, Boulder Lone Ranger Uncut, and today we're discussing the myth of the interest-only mortgage. What do I mean by that? Well, very simple. There's no such thing as an interest-only mortgage. Let me explain. You've probably heard the term interest-only mortgage or interest-only loan, but understand this. Interest-only is a particular option which you can add onto a mortgage in order to repay it differently than the standard amortized loan. Okay, so let's take a step back. An amortized loan means that you start out with a fixed period of time at which you're going to pay this loan off. For most loans, this is a 30-year time frame. During that time frame, you start out with a amortization table, meaning you're going to pay some mortgage interest each month, and you're going to pay back a little bit of principal. Over time, those actually convert, and you're paying more and more principal and less interest until the entire loan is paid off. Now, what does the interest-only option allow you to do? Very simple. For a specific period of time, normally 10 years, sometimes 5 years, but it can vary according to the option, you will be allowed to pay a minimum payment, which was just the interest for that loan. And how much is this payment, and how much does it vary from what a full payment would be? Here's a very simple calculation which you can do on any calculator. If you take your loan amount, say $200,000, and you multiply that by the interest rate, so for an 8% interest rate, that would be 0.08. You put those two together, 200,000 times 0.08, and you'll come up with $16,000. That is the annual amount of interest that you pay. Now you will need to divide that number by 12 to come up with your monthly payment. That payment number that you just came up with is your interest-only payment. During the option period, like I said, normally 10 years, sometimes 5, that's all you have to pay. You can always pay more if you choose to, but for that particular time, that is the minimum amount that you would pay. Now, at the end of the interest-only option period, the loan then converts for the rest of the life of the loan into a fully amortizing loan, a normal loan, where you will pay principal and interest. So, if you had a 10-year interest-only option, during those first 10 years you paid only interest only, then you would have a 20-year period to pay the loan back in full with a full payment of interest and principal. The myth of the interest-only loan has been shattered. This is Boulder Lone Ranger Uncut, and simply fill out the form below or call me at 720-365-9550 if you would like some more information on the interest-only option for a home mortgage loan.